Bobby, how are you?
How are
This is I'm not doing good, and I'll tell you why in a second. This is the Trader's Edge. I am Jim Iuorio. That's Bob Iaccino. Thank you guys so much for joining us. Well, fortunately, about 3 hours ago, I sold all my copper and shorted the shit out of it, is what I would love to have said had I really done any of that. Instead, I'm sitting on a 20% down loss on my copper right now. Did you see that?
Yeah, I see that. It's funny because I don't know that the move we've had lately was 20% in
No.
terms of like the fact that the
Tariffs.
tariffs might increase the price of copper to end consumers.
Yeah.
20% is just, I mean, you should be fine. It's not going to rally back 20%.
I'm not that worried. I was going to scramble to buy more, but then I couldn't decide what to buy. Futures, FCF, because Freeport-McMoRan has not been doing that well as far as correlating with copper. It has historically, but they've decoupled, which I'm kind of irritated by the last couple of weeks. But either way, I'm still hammered by it. We're going to go right to the guest just because you guys know we're running late because we had some difficulties with a storm down in South America where one of our producers is. But we are going to bring in David Settle, who is a market technician, a personal trader, a good one, and a basketball coach, just like myself. Let's bring in David Settle. David Settle, how are you, my friend?
I'm doing all right. How are you guys doing?
Good. My niece is the head coach for the local high school, huge high school in the Chicago area. And after about 2 years of being the head coach, she lost a couple of coaches. So I got the call about 3 months ago, like, hey, do you want to be my main assistant for the girls varsity team? So I was like, hell yeah. So we had our summer season. I didn't take a paycheck because if I take a paycheck, then I can't work with the girls at all in the off season. And I want to be able to. So I run some exercise classes out of my house and stuff. So I've been having a ton of fun. How's your basketball going?
Doing really good. We had a really good year last year, made it to the Final Four in our classification here in Utah. And my boy's a junior, and so we're going for his senior year next year. So
that's outstanding.
We're looking really good.
I got a basketball question.
Shoot.
Is a lost wig a reason to stop a game?
No, it is not.
Or flying artifacts onto the court.
I'm just going to pick up the wig and keep playing. Like they actually stopped the game.
Yeah. I feel guilt. I used to feel guilty. Now I feel almost angry. Is that I've coached girls basketball. Probably, I've coached basketball for 25 years now. This is 26, but 10 of them was girls. Now it's girls again, varsity. I love the game of girls basketball. I love to coach it. I don't like to watch it that much. I turn on the TV to watch basketball because I want to see athletic feats that I cannot do. I watch girls softball. I watch tennis. I watch golf. I'm just not going to watch the WNBA. And the more they keep telling me I have to, the more I don't want to. I know you probably like the WNBA and I'm fine with that, but do you think my point is reasonable?
Well, I only watch Caitlin Clark.
Yeah, that's all I watch too. I like Caitlin Clark. She shoots bombs. That's the fun part.
Yeah, she pushes the ball up the court. She makes great passes. She's kind of like a little Magic Johnson that can shoot.
Yeah. She looks skilled. Like she looks athletic. She's not just somebody who, made it from her height. Like her I know nothing about a shooter's form, right? I just know that when she shoots at the top of her jump. She doesn't have that great of a leap, obviously, but she looks professional when she does it. She doesn't look awkward. She looks athletic. So watching her, Jimmy, I would argue, is watching.
Oh, no, I do. I did give a caveat.
I'm just saying.
Yeah, I do. I watched her in college.
Nothing to do with her skin color.
Yeah, no, nothing at all. I love the way she sees the court. David hit, on the fast break, she makes like passes that are 2/3 of the court that are right on the money. So she doesn't get a lot of credit for that. Anyway, you've joined basketball talk here. No.
WNBA talk.
We're supposed to talk about markets, which we also love talking about markets. So so this rally today, Meta and by the way, breaking news. I love doing breaking news. Meta and Microsoft both beat. Correct. Both of them are up substantially. Last I checked, average about 5% for both of them. Qualcomm did not beat. Who cares? Meta and Microsoft are what matters. But like I said before, copper's down 20%. Pray for me. David, do you like this rally?
Yeah, I mean, it's been a nice run. It's coming off of that correction low point that we had earlier this year. And, and we're just grinding, right? We're just grinding to the upside. I posted a tweet out earlier today that taught back on April 30th, the odds that we were going to have rate cuts out to the end of the year. It was 4 at the time, but even to 5 rate cuts, we had like 76% odds that we'd have 100 basis points of cuts by December, and 36% odds that we'd have that 5th. So essentially a cut at every meeting starting in June. Obviously we haven't. June, July is now past. We haven't that. But since that point where those odds peaked, and they've come down, so the odds for 100 basis points are now down to like 0%. The markets are up 15% from that point. And not just from the April low, but from April 30th. So I like the fact that the market is responding positively to the fact that we just don't need rate cuts right now. We're doing, as you can see with Microsoft and Meta, we're doing just fine without them.
David, where do you fall in terms of the tariff effects? There's some people like myself and Jim that believe the tariff effects they're just overdone from a perspective of, people analyzing how tariffs are going to affect inflation. I maintain that tariffs are deflationary, not inflationary. I agree. Where do you fall? And then there were some people today that said tariff effects are going to take 18 to 24 months to show up. Where do you fall in that?
Yeah, I am not big into. I don't think that the tariffs are going to have that big of an impact, unless you start to see our currency, the U.S. dollar, really have a big. If it really were to take off to the upside, then you would have that kind of double whammy of a tax on the tariff and then a tax on the strong currency that you would have to exchange your currency into to get the goods here, to get our goods, right? But as long as the dollar is maintaining a nice steady pace and not going too extreme in one direction, I don't think the tariffs will be a very big impact at all.
So I really don't understand the people who say it's 18 to 24 months. Like the tariffs, they started. We've had them since May. If someone needed to pass them along in an inflationary cycle, they would have begun already. Why do they say 18 to 24 months? I don't even understand that. Jim, have you made any sense of that?
No, I've made complete sense of it, because every one of these economists who take a paycheck from a political side, I don't care if it's right or left, they have something they have to defend. And these clowns, and they are clowns. And Jason Furman, Justin, whatever his name is, Krugman, whatever. And they start, when they don't see them, they have to figure out why they're wrong and try to hide it in something. Say, well, we always said they weren't coming until 2027. Bullshit. They're wrong. Tariffs do not have to be inflationary. They can be. Oftentimes, I will even go to so far as say most oftentimes they're not. And we've gone over in tedium why they're not here. David, do you agree?
Yeah, I totally agree. Yeah, I totally 100% agree that the reason why they say it's a time frame is because it's not happening now. So then it will happen next year. And when it doesn't happen next year, they'll say, it will happen in 2027, right? That's just how it works.
Yeah. So before the last time we had you on, and I really appreciate it, you talked, one of the things that was the best takeaways for me is that you still believe in the Magnificent Seven. You did back then. I want to know what you believe now. Maybe it's the Magnificent Four, but you also think their leadership, I don't want to put words in your mouth. Do you think their leadership is critical to this rally, and how will we know when it's over?
Yeah, totally. Yeah. I mean, the winners keep winning. As long as we're winning, the winners that are getting you there are the ones that are going to keep winning. That's just the way it is. I mean, even in terms of like U.S. stocks versus international stocks, it's the same thing. Because the dollar hasn't been doing so hot, right, for most of this year, and international stocks have had a pretty decent run. But the reality is, even if the dollar is weak, U.S. markets are still by far the biggest market cap weighted of the global index, right? If there was one, they're by far the more market cap weighted. And so it's the same thing with just the U.S. If the markets are going to go up, then the stocks and the sectors that have the biggest weightings are going to be the ones that keep pushing it higher. And until they don't, and usually whenever there's a kind of a sign like we saw early this year going into the correction, or even in 2021 going into that correction of 2022, when they start to underperform and the market starts to broaden out, like you'll hear on TV, they say, the market's broadening out, this is a great thing. Usually that means something like we saw this year in 2022 is coming up, right? We don't want that broadening. We don't want energy to be outpacing the S&P 500. The ratio chart of XLE to SPY, that ratio, when you correlate it to the S&P, is like negative, like 70 some odd % correlation on a rolling 3-month basis. We don't want these industries. We want technology and communication services, to some degree financials now, because their weighting has gone up quite a bit. And of course, discretionary. Those are the sectors that need to outperform.
So tell me this. So you're just said something that I think is a really interesting takeaway. When oil XLE starts outperforming tech at a 3-month lag of that, there's usually somewhat of a correction. Is that what you just said?
Yeah.
That is, God, people write that down. That's valuable shit. How do you get an XLE versus SPY chart up? Do you just do it on your Bloom? Do you do it on your, what are you doing on?
Yeah, I just have on stock. I use stock charts. I have a ratio chart there, and it's fine. And I watch that particular ratio of technology, because that's the big winner, right? That's Microsoft, Nvidia, that's Apple. That's the big one. And then energy is the big one on the other side. So when that ratio starts to turn south, the market's usually about to turn south too.
Bobby?
Yeah, so I want to ask you both this question. So I was on an X space, a Twitter space, talking about reaction to the Fed. And somebody on there, I wish I remembered who it was. I admitted when it was my turn to talk that I don't remember who said it. So I'm saying it as if it's mine, but it's not. This particular person said that there is now going to be, Trump's not going to fire Powell. He's not going to want to deal with the potential for, legal challenge to that and some of the headaches that might come with that. But he is going to basically create a shadow Fed chair. He's going to come out way ahead of time and say who the replacement is. And it's going to be somebody in the current FOMC. Likely to be it's probably not going to be Mickey Bowman.
We saw the two. They auditioned for it today by dissenting, right? But anyway,
So he said he's going to essentially try and erode Jerome Powell by calling early who his replacement is going to be. What do you guys think is more likely, that or that he fires him?
Oh, they won't. I don't think he fire him. I think it's a very low probability scenario. He rides out his term, and he'll ride out his term following the same policy path he set forth. Again, like unemployment rates, like he said today, unemployment rates not rising, inflation's not falling. One thing that doesn't get talked about, though, and it does generally lead to Fed actions in terms of, like, in this case, cuts, is the velocity of money. The velocity of money came out today for the second quarter, for the first quarter, came out for the first quarter. And that was the first release. It's the advanced release. And I watched that really, really closely, because usually when that thing goes negative on a year-over-year basis, the ratio, when it starts to roll over, usually the Fed steps in and starts. So it's a lot of chatter about, CPI, and we'll get a couple more CPIs. But it's that velocity of money, because that measures the exchange of that same dollar from one person to another throughout the economy. And the more the ratio is higher, the more it's exchanging. So that's a reflection of strong aggregate demand in the economy. So if velocity is falling like it is, and it's actually hit zero, so on a year-over-year basis, the ratio is the same spot now as it was a year ago, after having been at a very strong level. Like, money was exchanging hands 2021, 2022 at a huge rate, because it was all, we had all that fiscal stimulus, we put it in the system, and we're just buying stuff and prices going up. Well, it's been really rolling over now, and that doesn't get talked about quite a bit. And I think if that thing goes negative, and it's only released quarterly, so you have to watch on a monthly basis the M2 supply. And I know that gets not a lot of people really pay too much attention to that, but they're inversely correlated, and that comes out every month. So if M2 is rising, that's generally in response to velocity dropping. And M2 has been rising, which, again, that might be the reason why the Fed ultimately starts to cut rates, and it doesn't get talked about very much at all.
So real quick, I don't know if we're going to be able to put up comments today, because any of you guys that are regular watchers of this, we started later, we had technical difficulties. So I don't know if we're able to put up comments. So I just want to read a couple real quick, Jimmy. Yeah. If you'll allow that. It's stock charts. That's Remo, our friend Remo. If you don't follow Remo, you should. ITZ stock. CHARTZ, its stock charts. Said good afternoon, and then he said shadow fed, Powell imaged tarnished. Okay, we can put them up.
Yeah.
So I like that. That was Remo's choice on the two that I put out.
He's right about that. I mean, that's Waller and Bauman. They're saying screw you to Jerome Powell. We side with the president.
Then when was the last time? I know they said the last time that they dissented
1993. That was when the last time there were two dissenters.
But was that, did they dissent in favor of cuts? Because I think in 93, they probably dissented in favor of hikes, didn't they?
You're probably right. The last time we had two dissenters, multiple dissenters is the way it was worded, was 1993.
I mean, it's rare. It's rare to dissent in favor of cuts. Usually if they're cutting, everybody's on board because we need it, right? And everybody's on board.
Right.
It's more common to dissent with hikes because nobody wants to hike, right? Nobody wants to raise the cost of money.
And a lot of the commentators, after the two dissenters came out in favor of cutting, said that likely means that we're moving toward cutting. And then Powell kind of splashed water on that, right? Especially in the press conference. I want to put up Tim's comment, then his question. To his comment, I want to answer because, Jim, it's something we talked about on the rundown. Tim says the CEO of Ford is saying tariffs are already having a large impact. I don't believe him.
Yep.
And the reason I say that is because CEOs, especially of US-based companies, are notorious for blaming whatever the thing is. Okay. Remember when it was weather? Remember when it was the polar vortex is affecting
water down
everyone?
Earnings estimates.
Yeah, they do that all the time. I don't believe CEOs because they get paid. And if they're saying tariffs already have a big impact and then they have their earnings and they leap over this lowered bar, the stock goes screaming higher and then they get their bonus. But I want to go to Tim's question if I could, Jimmy. Are companies like Microsoft and Meta effectively monopolies in their respective sectors, David? Does an innovative startup have a chance to compete?
Not at their scale. No, not at their scale. They would have to innovate in a different space, right? And they can get to their scale because, I mean, obviously Microsoft and Meta were not always mega caps. So, I mean, yeah, they can't compete with them at that scale, or in that particular space. But in a different niche, they definitely can innovate. But usually innovation doesn't necessarily occur in like mature secular bull cycles, right? The innovation starts to occur whenever like we're going through a down cycle in the business cycle. Like that's when Microsoft and Meta started to take off. That's when they really started, was when things were low and down and they started to take off. Early 80s, late 70s for Microsoft, 2000 in that area for Meta. So that's, we don't usually look for innovation like when when long-term valuation ratios are at extreme highs. It's usually the other side when that happens.
What you just mentioned is really interesting though, because like Nvidia wasn't a mega cap. How many years ago when and then all of a sudden they're meteoric rise, but that gives them, because they rose in what they rose in, they could now compete with anyone and anything they chose to because they have just massive deep pockets behind them. I'm not saying they will, but yeah, that's a great answer to that question, David. Yeah. Bob, we got another one or no?
No, that's it for
Nvidia came out of 2022. So it was a 2022 off of that low point that they had a 10-bagger. I mean, they essentially were a 10-bagger coming off of the early 2020, and now they're a mega cap.
Right.
But it was, again, off of a year-long correction in 2022 where they were able to effectively take off.
It's absolutely crazy. So let's pivot from tech for a second. You mentioned banking. Is this a fundamental? Do you like banking? And if so, is it fundamental or technical? Please explain.
Fundamental mainly, not so much technical yet, but mainly fundamental. When you have rising interest rates, right, like we've had, like to get to this point, financials tend to do well, and they've it's been the three-headed monster of tech, discretionary communication services. I think financials have actually crept into that space. They're one of the top three now, and that's kind of gone largely unnoticed. So I think we're in a time where they're pretty favorable as long as the rates are rising. Until the Fed starts cutting rates, then they're not going to be so favorable. But as long as rates stay elevated and where they're at, I think they're a good spot to be in.
Okay. And which ones particularly, or you just look at the XLF?
Yeah, XLF. Yeah, the big ones in XLF.
Okay. And I want to pivot to commodities before I go back to Bobby. What about gold? But copper just got absolutely walloped like I've never seen before.
No
Copper,
one's ever
gold,
seen it,
silver.
Jimmy.
What's that?
No one's ever seen it. It's the biggest single day percentage move ever.
Oh, is it really? Oh, so I'm not just making that up. Okay, because I
No.
was like, shit, I've never seen something like that before. What do you think of that space now, getting cheaper prices?
It makes you wonder, like, again, copper is that reflection. The big jump that we had in copper, I'll just pull it up here on my side. The big jump that we had here recently was that tariff news, and we've obviously completely reversed that. So, but if you look at today's close from where we were a couple, just one expiration cycle ago, we're not that much lower than where we were. So it kind of goes to show that the tariff bounce that we had was artificial.
What Trump giveth, Trump can taketh away. Luis, can you put the banner up, or can we do the ad for the Tradier Pro? Please, this time of the show, we ask a favor to you guys watching us. Tradier is an outstanding company. The support they've given us to create this platform, we are eternally grateful. You can help out by trying a 3-month subscription to Tradier Pro. It is an options platform like none other. We talk to veteran options traders down to novices who all say it is the perfect options trading program. All you have to do is scan the code, try for 3 months, no charge to you. Please do that as a favor to us. Bobby.
Yeah, I want to point out that copper is over 11% lower than before Liberation Day. So that always goes to show you how overextended these things get, especially in a commodity like copper. And it's interesting because if we were to have gotten, I think part of it is that we didn't get even an inkling of a September rate cut. So that has quite a bit to do with the sell-off as well. So I think it's correct that it's lower than pre-Liberation Day, because I think a lot of it had to do with, I mean, if we're talking about an economy, and there's a question in here, David, if we're talking about an economy that is solid, right? Part of the reason I believe that the unemployment rate is sitting where it is because of the reduction in labor force participation, right? I mean, we definitely have jobless claims going in the wrong direction, although they're nowhere near a recession rate, right? So we're getting layoffs, but we're also getting a shrinking of the overall labor force. I'm not sure, I'm not smart enough to know if it has to do with deportations or what, but the labor force is shrinking. And I think one of the biggest headwinds that could happen over the let's call it 2 or 3 years is that if the deportations continue, you could see a forced rise in wages, right? There's an absolute in certain sectors, not every sector. Is that nuts to think about at this stage? Because I did always say that if Trump got his way, we would have and you guys know this, 15 to 30% drop in stocks. We had that. And then we would get a 2-decade bull market. Am I wrong in thinking that at this stage?
David.
I think, I don't think these I don't think that the unemployment rate will be impacted dramatically by what we're seeing there in the deportations. I think, I do think there might be a slight bump. I know that that's kind of the chatter. There might be a slight bump in the wages. If we're kind of taking away the drag in the wages right now. Again, I think and it kind of goes back to our discussion on the metals. I think the biggest impact is the currency value and what the currency is doing, and whether or not the economy growing or not growing from GDP that we saw here just recently, the unemployment rate that we're going to see here tomorrow, like the directions of those. But the currency, like the dollar's had a bad year, and it's had some attempts at trying to rebound to a small degree. In the past, 3-4 days, it's had a really good, including today, it's had a really, really good run almost to a point of like a breakout move. Now, that's not the cause for copper dropping as much as it did, right. but it is making it less favorable to be in metals, or for that matter, commodities just in general right now.
Could the dollars rally be why gold has been getting walloped too, though?
Yeah, I would say. I mean, that's the biggest reason why gold is as bullish as it's been, is because of the weakness in the dollar.
I do too. So the dollar thing, we were talking with Jim Bianco on Monday, and I was very, very confused by the dollar's break this year. And I started to just chalk it up to, there have been several years of a buy the dollar, sell everything else trade that I think was getting unwound. Because I didn't see the fundamental story change that much. And people are like, well, Trump likes weak dollar. I don't give a shit what Trump likes. They haven't lowered rates yet. Rates are still relatively high. Is there something I'm missing in the dollar's break?
No, I think it's just I mean, they're cyclical. Currencies are cyclical. They can't trend like a stock for like ever. Right? Eventually, they just get so high on a relative basis to other currencies, and I mean, the U.S. has been killing international markets for the last I don't know how many years now, just absolutely destroying it. And so he had a little bit of a drop, right? A little drop in the dollar, but nothing significant, nothing trend changing, so to speak. But it was enough to put a lot of like the help, which we saw when the dollar dropped, the U.S. market dropped quite a bit earlier this year. Then the dollar kept dropping, the markets rallied significantly. So now it's rising up a little bit, like and breaking out to a small degree. I think at some point in time, I don't think we're going to go into another like 10-15% decline like we just had. But that's not going to happen. But can it limit the speed that we go up for the rest of the year if the dollar continues to go up? I definitely think that's going to happen, especially if they start cutting rates.
Oh, sorry about that. What about I thought you were done. That's why I didn't mean to interrupt. But what about this thesis is that was taking my wife to Europe for her first time there at the end of April, beginning of May. The 3 weeks prior to our trip, the euro rallied 14% against the dollar. So is there a chance, bear with me here, that the currency markets just hate Jim Iuorio? Is that possible?
There's a definite chance of that.
Okay, good. So
that seems to always be the case for me too. So I know that feeling.
I was so pissed. We'd get them like, that's 25 euro and for a bottle of wine. In my head, I'd be like, that would be $25 before. Now it's like $30. Yeah.
Couple of comments from Widge that I want to put up. The first one is about the jobless claims. I think that's the first one. No. Well, let's do that first. Jobless claims have been generally flat for over a year, but I agree with your point on employment and wages, Bobby. And then his comment before that, Luis or Max, whoever's putting these up, how can we possibly view 2025 economic data in the same light as we viewed data from the previous years? I think too many conclusions are being drawn on policy effects and reversals. Anyone want to take a stab at that?
Hold on, give me 1 second on that too, because I think what he's saying is that you guys tell me, with all the changes that are happening and with all the transition period that we're in, it is going to take a long time to have the luxury of distance to evaluate them. And I agree 100% what he's saying too. I thought 2025 would be a year filled with tumult. We've had that so far, but I think 2026 and 2027 are going to be the beneficiaries. Now, I know we're saying that we're sitting at all-time highs, so the question becomes, is this a realistic place to be? I guess so, David.
Yeah. From an equity standpoint?
Yeah, I guess so.
Yeah. I mean that's like we're strong. Like the market's in a strong trend, and it would take and I believe that we are in the late stages. Now, when I say that, that doesn't automatically mean I think the markets are going to go south the rest of this year. I don't think they're going to go south in 2026. You can be like, as we saw in the late 90s, in the 97, we were in the late stages of a secular bull market cycle. And then we had 98, and then we had 99, and then we had the beginning of 2000. So you can be late stage for quite a while. And I think that that's where we're at. And I think the economy, like I know we're having a little bit of volatility here with the first quarter that we had from a GDP standpoint, but I think that was transitory. I don't think that necessarily that we're going to get a significant change. And then until we do, until we are overextended from like a leverage standpoint, I don't see the markets like having a catalyst that will all of a sudden have it drop. In my definition of a bear market is when the stock market drops below its 200-week moving average. I don't see that happening the end of this year. I don't see it happening next year. And as the result of that is because of how strong the economy will be throughout the next couple of years, in my opinion. So take that for what it's worth.
Real quick, I want to throw up, first of all, Frank said, great job, fellas, which I appreciate that, Frank. I wanted you to know that I saw that.
Hey.
Our boy Remo again, it's stock charts. Apple reports tomorrow. They should buy Perplexity. Could be a strategically beneficial move. I'll give that to both of you, but I will say that they partnered with ChatGPT. So I would think until they ended that partnership, they wouldn't buy Perplexity. But anyone got any insight on that? David?
Yeah, I've heard that quite a bit. I think anybody is looking. I think right now the street is looking for something that will make Apple break out because it is lagging. Yeah. It is lagging so far.
It really is.
I sold most of my Apple about 3 weeks ago. Yeah. But anyway, yeah.
They're not innovating. I mean, there's nothing there's nothing for them to expand that market cap. I mean, they're up to a very mature level, and Nvidia obviously has something to continue to expand its market cap past this little ceiling that it's at with its peers. Microsoft has something to expand its market cap, and Apple just doesn't. So I've heard the idea about Perplexity, but I think it's generally an idea that please Apple do something to break out of this sideways move, and so that you're not lagging to such a large degree.
And I will say on that, like I use sort of like anecdotally, this is the first time in a long time that I've seriously considered dropping Apple. I really have, moving to an Android-based phone. There's just
I thought you meant dropping Apple stock. You mean dropping?
No. I don't own Apple stock right now. I haven't for quite a while. But I got out of Apple in about January of 2025 completely, and I've kind of bled out of it slowly but surely because it felt like they were peaking to me technically. But when I look at it now, they don't innovate anymore. They really don't. Even going into the AI the way they did and the way they announced they did, it was so much more like we're following as opposed to we're leading, which seemed very un-Apple-like. And to that point, Tim put up a comment: will Apple become the new Crackberry? BlackBerry, obviously.
Yeah. I don't know if I'm ready to that. I mean, they still have everybody having Apple phones. Like when you said drop your Apple, I can't drop my Apple. All my family has it, and it's a pain in the ass to text in groups. From my iPad, Apple makes it difficult. So they've roped you in quite a bit. To answer your question about Perplexity, because when I heard it at first, is like, well, they have ChatGPT, right? Is that what you said? So is that to be courting another one, which seems to me to be like cheating. But if they're saying, is Perplexity so good and so advanced that if you don't buy it, it is going to get critical mass in itself and start stomping out everyone else? Well, that's an interesting topic too. Is that part of the equation, David?
Well, I think the issue is, like, if they buy Perplexity, they're buying. It's going to be a cost. There's going to be a significant cost for that. So they're kind of past the stage where they can buy something at a small scale and then Applefy it, right? And just like make it just explode for everybody. They have to buy something that's already pretty mature as it is, like Perplexity. It's a pretty big name. It's going to cost. So if they end up having to buy that, I think it would end up being kind of a desperation type move to say, like, because they need wins so desperately, but it won't create that. It won't create the breakout move that I think all investors are looking to see. Like, what's going to make Apple break out to catch up to Nvidia and keep it going with Microsoft? And I don't think that would do. In fact, I think it would actually be the opposite. If they were to I think that would actually be a loss for them if they were to buy Perplexity,
because they'd appear desperate.
Exactly, and it would be so expensive.
Yeah, it's amazing. What other sectors? We talked about commodities. We talked about financials. You mentioned discretionary kind of very quickly before. Is there anything else that you're looking at, and it could even be small caps, that you're thinking is going to be the next star that we might be talking about over the next quarter?
Yeah, not over the next quarter. I would stay with the mega caps, right? I would stay with mega caps, and as long as we are bullish, if we start to show any cracks, and there's lots of technical signs that will show whenever things might start to pull back, say 5 to 10%, because that's the problem with the mega caps. When we're going up, they're great. They are absolutely great. Everybody talked about, like, just the last couple of months, how much like all these other sectors and we're outperforming tech, and that's the reason why is because when things go south, technology, like all these other areas, just hold their value better because technology goes down so much. But when they rebound, technology rebounds more than everybody else, all these mega cap names. So if we're like in the next quarter, which is seasonally actually from a seasonality standpoint, it's actually a pretty volatile time of year, right? Yeah. Like this starts at like the end of this July starts the
end of July, starts the seasonal weakness
all the way through October, right? All the way through the end of October, November. There tends to be volatility, whether or not that translates to a down market, but there tends to be volatility here. So if we're going to have volatility, then yes, industrials, financials, these cyclicals, energy, materials, those are the other cyclical areas of the market. They hold their value better in times of volatility relative to XOK, XOY, XLC because of how much they've gone up. Right? because they've gone up more, they lose more, especially in this latest rally off of April. Technology is killing everybody off of that low point. So if we're going to have volatility, you don't want to be in technology. You would prefer to be in small caps as well as these, not because they'll go up a ton, but they will hold value better than these large cap. But if we have a good quarter, and I'm leaning in that direction where we're going to have a good, this time of year is actually going to be a good year for this year. You want to be in those large cap names, right?
Bobby,
the ones that lead
David said a couple things about what his indication will be that perhaps the correction is afoot. You look at it much more. David is a mix of fundamental and technicals. You're more technicals. What's your level in the S&P that below that you think it's a 10% crack?
It's a ways away. I mean, if I were looking at the S&P futures, it'd be somewhere around 6,030. Yeah. And it actually might even be a little bit lower than that because, and again, I'm talking about the futures. I can convert it to SPY if anybody wants me to, but the 200 sits at 615. So it'd be I'm sorry, 6,015. Yeah. So for the S&P futures, that'd be the September contract now. It'd be about between 6,031 and 6,015. If I convert that to SPY really quickly, it is 587.90 or so. Okay. And the upside of that's like 595. So, I mean, it's a long way away.
You can get down to the 50-day moving average with about a 5% decline. And if we break that, then there's a pretty sizable gap down to the 200, so it could turn into worse. But more likely, if we hit that 50-day and get that 5% decline, I think you'll have a really good buying opportunity there.
Yeah, I mean, you're talking about, so in the SPY where I have the 50, it's about 3.78% to get there. So through that is around 4 to 5%. And it's about just short of 8% to the 200. And then you'd have everybody coming in going, okay, there's our correction. We can move back up, which is almost all, when I was coming up, it was 10% correction. Then it became an 8 to 10% move was a correction. And now it's starting to be like 6, 7%. It's like, oh, that's all right. That's healthy. The buy the dip crowd has gotten bigger and bigger and bigger and bigger. And I think now more than ever, they're going to be right that the dip's going to work.
So, David, I think one of the rallies too, I've been arguing about this with people for a long time. April 8th represented to me the single most asinine selling spree that I've ever seen in my career. And I polled like 200 different money managers and said they were getting calls like, Orange man bad, he's killing the economy, sell out my stock. It's one thing if you go over policy by policy and you make the calculated decision that you don't believe the economy is going to do well, that's one thing. But if you're just emotional weirdo and selling all the shit, but anyway, the point is going to be is that to me, it was like pushing the basketball so far underwater. And then when all of a sudden they realized, okay, that was all stupid, the spring back, the first half of the move higher was just like the roller coaster bounced back up. And then all of a sudden it started to gain legs. Is there some wisdom in that or no?
Yeah, I agree. I mean, you saw that April 9th. April 9th, how much did we like it? That thing bounced up tremendously in one single day. Obviously, we retested a little bit, but yeah, I mean, that's when you have such a big expansion of like the bandwidth, like we did in early April, late March, where the Bollinger bandwidth is what kind of I look at, and as well as like the VIX spiked up to a high level. Whenever these, and I look at the ATR, I normalize the ATR by the price of the S&P, so I can kind of normalize that. And so all these things were all at extremes. They were all, the VIX not so much, but it was really, really high. And the other two were at extremes. And when they start to roll back down, and we get through it, because I even taught this today in my class, when you look at an expansion of that bandwidth, a huge expansion like we had there, and then we reverse like we did in April. We reverse back through the 20-day average, which is in between usually that bandwidth. So you drop so hard, and you push that ball down, it spikes back up above, in this case, the 20-day exponential moving average, which is in between. Then usually you've got legs at that point. And now it's a nice, beautiful, steady uptrend to the upside we saw in 2017.
What amazing. By the way, and the moral of the story here, and the moral of the story's always been, if you let emotions and over emotions drive your decisions, you will eventually get smacked in the ass, and not in the good way. The way to avoid that is to watch us here at Trader's Edge, and to come to the Unfiltered Investor, or to go to David's classes and listen to things that he says. There's people out there who will try to take the emotion out of it. which we do. And that's, by the way, that's why technical analysis works mostly, is because it takes out the emotion. Bobby?
Yeah, actually, in the images that you see in technical analysis, whether it's moving averages, trend line, that's representing the emotion of other people.
Yeah.
So, that's why I tell people all the time, what can you tell me that's true about the market? Price. That's it.
Price.
That's all I can tell you that I'm positive is true. I can tell you, I don't know, make one up. I can tell you that Shopify traded at 123.01. That's the only thing I can tell you. It's absolutely true. Timmy's got another question. I'm not sure, Tim, you might want to clarify. Any thought on Utes? I don't know if you mean the Ukrainian traded ETF or utilities.
I think it's utilities.
Yeah, I mean, there's a symbol UTE, which is Ukrainian traded index in euros. But I'm assuming he means utilities there.
Yeah, not a big fan. Not a big fan of them right now. Unless again, there's
right. I mean,
unless for a period of volatility. If we go in volatility, they're a great place to be. If we're trending higher, they're not a great. They'll lag. I mean, they'll go up, but they'll lag, and it's a matter if you want to be in something that's lagging.
I've actually never owned utilities ever.
To me,
it's always, and it's not a knock on Timmy if he's in them. It's always to me just been a dividend play, and I'm very good friends with a lot of value guys, and this actually leads me to a question for David. Yeah, Tim is one of them. There's two Tims. This Tim
Melvin. Yeah.
Tim Melvin's another one. And a lot of these guys look at some of these stocks and they just say, I cannot buy this valuation. But another friend of ours, David, Mike Singleton, pointed out that he did a study recently that showed that valuation almost doesn't matter in the sort of window that he looks at things, which is 3 to 5 years. It almost doesn't matter anymore. Do you have a stance on that?
I mean, if he's got,
I mean, overvalued stocks, right? Do you look at a stock and say it's overvalued, I can't buy it?
Oh, if it's overvalued, I would love it. I mean, there's a reason why it's overvalued. I mean, as long as we're in a trending market and a momentum market, overvalued is what will continue to trend. I mean, you can look for better valuations, and my business partner does that too. He's really, really good at that, using dividend yields and things to find, stocks at good prices that will continue to trend. And he's had a lot of success with it. But he's also had a lot of success in the last couple of years with NVIDIA and with Palantir, and because they're very overvalued, have been, and have continued to be, and they'll trend higher. So I actually don't mind overvalued stocks as long as we maintain a trending market.
So you're saying be open to both?
Oh yeah, for sure.
Yeah. No, David, Mike's saying it doesn't matter. David's saying it matters, but the other way we're thinking about it, overvalued tends to become more overvalued in a trending market. And I think that that's brilliant. Before we go, we have time for a couple more questions. You mentioned a couple indicators that you look at. One was the velocity of money. One was the tech versus oil, which I thought was very, very interesting as indicators when sentiment is shifting, leaving us open to a down move. Can you give us two more that you look at that are important, or are there two more?
Yeah, well, breadth, of course, right? Once you start to see a drop in breadth, and we are seeing that right now. But if you see a drop in breadth in terms of like advancers versus decliners, I look at the McClellan oscillator. A lot of people do. It's a very common one. I look at the number of stocks above the 50-day moving average. I look at the number of new highs we get. I look at all these things. I compare them to an average value, 20-day average, for an example. And so as long as they're at high levels, 300 stocks for the number of stocks above the S&P, that as long as they're at these strong levels, great. But when they start to break below their 20-day average and their 20-day average starts to roll over, that usually doesn't mean that the market's rolling over that day, but it's definitely a sign of weakness that we are, again, you'll hear it on TV, and this is probably another indicator. When they start talking about the broadening trade, right, on how great this broadening trade is, that's generally another sign that we're about to go south.
So this is a question for both of you. So one thing that I've always argued is that bubbles and bubble popping is usually fueled by just massive over leverage, but not necessarily like big hedge funds. BlackRock responds to a margin call a lot different than a mom and pop responds to a margin call. Yeah. I want to know, because brokerage houses can tell you, well, this many stocks are owned on leverage, but they won't tell you about the strength of the hand. Is there a way to tell like retail leverage in certain things and when it gets to big levels. I don't think that there is. I've never been able to find it so far. Do you got
Copper
anything
chart today?
What's that?
Copper chart today.
Yeah, that's a perfect example of too many people. And is it still going lower? This has been the most expensive show I've ever done, people.
No, I personally don't see when, I mean, I don't think there's any reliable indicator when retail is over leveraged. I think you look at, I think divergences show that a little bit. When you see things are overbought and they're still going higher, or oversold and still going lower, I think that represents it a little bit, but it's certainly not something I would rely on. Yeah. I mean, I look at things from perspective. I don't think that retail people should leverage up. I really don't.
Well, I mean, if they know how to use it, you know, and they're just doing it for capital efficiency, that's one thing. But yes,
that in and of itself means you're not over leveraged.
Yeah, right. You're not over leveraged, right? Yeah. So
the VIX, watching the VIX and watching it when it compresses, like, so when the ranges for the VIX, I think it was Andrew Thrasher that wrote that paper for the CMT Association. When the VIX really compresses, that's generally a sign that we might be a little over. I've heard the word complacent, but that's kind of the same idea.
Yeah, I believe in that too. Like everyone, CNBC used to always, I can't believe I said their name out loud, the TMZ of financial networks, always try to make it, well, the VIX is high, so everybody's fearful. Well, okay, no, a lot of people have bought their protection now. They don't need to be fearful. Jeff Kilberg always said the smartest thing I've ever said, which, Jeff, if you're watching like you normally do, it's the only smart thing you've ever said. is when the VIX is 45, I buy stocks. And I thought, wow, that's just brilliant. And it's worked every time. Yeah, because it shows absolute, complete panic when the VIX goes over 45. Bobby, got a last question?
Yeah, this is my last question. Since we are, this is a live show, do either one of you, it's sort of two-part, do either one of you care that the Treasury said they're going to double their amount of purchases, long-end purchases?
Whoa. Long-end purchases, the Treasury?
The Treasury. They said it in the refinancing today. But just for context, when the Fed was buying, they were buying 45 billion a month. The Treasury is moving from 1 billion to 2 billion, and they didn't even say they're guaranteed to be buying those. They're extending how many they can buy back, and it's long end.
So they're going to buy long end and sell short end to finance. Is that what we're saying?
I don't know about the second part of that, but yeah, they're expanding the amount that they can buy on the long end from 1 billion.
I'm going to have a detailed answer to that, but unfortunately not till tomorrow.
Yeah, again, you know, for context, Fed was doing 40 to 45 billion. Treasury is saying they're going to from 1 billion to 2. So I don't even know if it makes a dent. But that's number one. Number two, does anyone think PCE can affect the market at all, given that we just had a Fed meeting and that we got a jobless number on Friday, David?
No, I'm not. CPI is like the PCE. I mean, I know it's not the same, but from a headline standpoint and from a market sentiment standpoint, unless it's dramatically different than what you get early on in the month, it usually doesn't change much by the month.
Okay.
I think I mostly agree, but not 100%. I think there are curveballs that PCA can give us. Yeah. You know what bothers the shit out of me is that on my Bloomberg terminal, it still says PCE is like a tier 3 number. You know, it gives the little bars of the importance. And I feel like calling them and saying, you're living 10 years ago. People actually watch PCE now. But I agree. We just had the Fed. We have unemployment on Friday, sandwiched between, you know, half of the NASDAQ reporting in 2 days' time. So I think that there are other things that are clearly more important than.
I have one last comment.
Okay.
Either of you ever owned American Eagle jeans? Because I'm thinking of buying some.
The jeans or the stock?
I'm not going to expand.
By the way, speaking of jeans, so David is tall, blonde, blue-eyed. So he could have done that Levi's commercial and said, my jeans are better than yours. And everyone would have pointed.
It's just a really big, funny thing on X. There's a picture of Trump in those jeans and that denim shirt. There's a picture of Powell in those jeans and that denim shirt. It's just become really funny to me.
The whole thing is hysterical. I wrote a thing today.
Tiffany Fong, who is a big sort of Bitcoin influencer, just posted one that said, if you like this picture, you're a Nazi, and it's the picture of Sydney Sweeney. And there's a bunch of people that put Sieg Heil and all kinds of stuff after that.
You know who else has great jeans, by the way? Michael Jordan had pretty good genes. I mentioned Cam Newton just because he was tall. Athletic.
You also mentioned Hedy Lamarr, which I thought was an amazing reference.
One of the best genes ever. She was a brilliant scientist and a hottie. Yeah, you can still say that in 2025. You're not worried about being canceled. She still has patents and inventions that are today that helped us win World War II. Did you know that, David, that Hedy Lamarr was a genius scientist? Yeah. So
I'm a big Blazing Saddles fan.
It's Headley. It's Headley. Yes. All right, let's wrap it. We got a late start. Thank you guys so much for those who waited around to watch the show. You guys are amazing, and we totally so much appreciate all the support you give us and help us with the show by giving good comments and questions. This has been the Futures Edge. I'm Jim Iuorio. That's Bob Iaccino. This has been the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. That's David Settle. David, you can find him on Twitter at Luis
David Settle 42.
David Settle. What's 42? Jackie Robinson?
No, that's the number. That's the answer to everything in the universe.
Oh, right. Douglas Adams, right? That's his name, right? Douglas Adams?
Yep.
Yeah, I love those books. Restaurant at the End of the Universe and Hitchhiker's Guide. Anyway, good night, you guys. Thank you.
All right.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.